What is happening in the markets, folks? Welcome back to Bitcoin Bulletin, where we bring you the absolute hottest updates from the world of digital assets and beyond. The pace of change is relentless, the news cycle is spinning faster than ever, and if you're not plugged in, you're missing out. Today, we've got a packed show that you absolutely cannot afford to miss. We're diving deep into the forces that are shaping the crypto landscape right now. First up, are we seeing a major shift in the currents? We've got the big players like Bitcoin, Ethereum, and XRP taking a breather, and we're breaking down the 3 critical headwinds that could be steering the entire sector. What are these unseen forces, and how are they impacting your investments? You need to know. Then, we're shifting gears to look at some fascinating market dynamics. We'll explore the divergence in Bitcoin's sell-off and what institutional buying volume tells us about contrarian positioning amidst retail volatility and corporate accumulation. It's a complex picture, and we're here to paint it clearly for you. Next, get ready for some serious operational updates. We're talking about Cango Inc. and their latest Bitcoin production figures for August 2025, including their mining operations and total holdings. Are they scaling up, and what does this mean for the network? We've got the numbers. And finally, a major move from Japan. Metaplanet shareholders have given the green light for a massive funding initiative, all aimed at acquiring more Bitcoin. We're talking billions, folks. What does this mean for their strategy and the broader market? Stick around as we break it all down. You do not want to miss a single second of this. Make sure you hit that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. The market headwinds. Bitcoin, XRP, and Ethereum are experiencing a notable pullback after reaching new highs in mid-August. Bitcoin has seen a few percent dip, while Ethereum has pulled back a bit more, and XRP has cooled from its recent peak. While short-term volatility is a given in the crypto space, and these assets have shown strong year-to-date gains, there are 3 significant bearish headwinds investors need to monitor closely. These factors are not only influencing the current bull run, but are likely to remain relevant for the foreseeable future. The first major headwind is the pervasive uncertainty surrounding government policy, particularly in the United States. The administration's approach to economic policy, including tariffs, has created a dynamic where rules can change rapidly, often without a clear, overarching strategy. This unpredictability makes investors hesitant to commit capital to riskier, long-duration assets like cryptocurrencies. Tariffs, in particular, have been cited as a contributor to inflation through higher import prices, and their full impact is still unfolding. This complex policy environment forces entities like the Federal Reserve to navigate a delicate balancing act, potentially dampening investor appetite for volatile assets. When business costs increase and investor confidence wavers, the flow of new capital into markets can slow, acting as a drag on even strong uptrends. The second headwind involves market sentiment and profit-taking behavior among early investors. We are observing a trend where long-term cryptocurrency holders, often referred to as whales, particularly in Bitcoin, are beginning to offload some of their holdings at a profit. A significant sale of 24,000 Bitcoins, for instance, coincided with a price downturn. While these profit-taking waves can create temporary downward pressure, it's important to note that realized profits remain relatively minimal compared to previous peaks. This suggests that while there might be episodic supply overhangs, the underlying structure of holdings remains robust. The third and final headwind is psychological, primarily affecting sentiment among retail investors. Following the market downturns of 2021 and early 2025, mainstream confidence in the reliability and safety of crypto investments remains mixed. Surveys indicate a significant portion of the public harbors skepticism due to past crashes. This cautious sentiment among retail investors contrasts sharply with the highly active and seemingly bullish stance of financial institutions, which have recently seen substantial inflows into digital asset products. This divergence means that while institutional players continue to build exposure and infrastructure, pullbacks might feel more pronounced due to hesitant retail participation. However, as policy clarity improves and profit-taking subsides, the long-term investment case for Bitcoin, Ethereum, and XRP remains intact, supported by the ongoing institutional accumulation. But what exactly are these institutions doing, and how does it contrast with retail sentiment? We're about to dive into the fascinating divergence in Bitcoin's sell-off and the institutional buy-volume dynamics that are shaping the market. Contrarian positioning amidst retail volatility. Bitcoin's recent price action presents a complex narrative, marked by a divergence between retail investor sentiment and institutional activity. While Bitcoin, along with Ethereum and XRP, has seen a dip from its mid-August highs, the underlying market dynamics reveal a more nuanced picture. We're witnessing a sell-off that, on the surface, might appear as a broad market correction. But a closer look at institutional buy volume suggests a contrarian positioning is at play, potentially buffering retail volatility and indicating a strategic accumulation phase. The market has been influenced by several macroeconomic headwinds, including policy uncertainty and shifts in investor sentiment. These factors have contributed to a general caution, especially among retail investors who remain wary after past market downturns. Surveys highlight that a significant portion of the public still expresses low confidence in the safety and reliability of crypto investments. This cautious retail stance often amplifies price swings, as smaller sell-offs can be exacerbated by a lack of strong buying interest from this segment. However, this retail hesitancy is juxtaposed with robust activity from institutional players. Digital asset products have recently recorded some of the largest weekly net inflows on record, signaling strong demand from sophisticated investors and financial institutions. These entities are not only increasing their exposure, but are also actively building the necessary infrastructure to support digital assets. This institutional accumulation acts as a stabilizing force, absorbing some of the selling pressure and suggesting a belief in the long-term value proposition of cryptocurrencies. The divergence in behavior, cautious retail versus aggressive institutional accumulation, creates a unique market environment. When retail investors take profits or exit positions due to market jitters, institutions are stepping in to acquire assets at potentially lower prices. This contrarian positioning by institutions means they are buying when others are selling, a strategy often employed to maximize long-term returns. It suggests that while short-term price action might be influenced by broader economic concerns or retail sentiment, the underlying demand from institutions remains strong. This dynamic also impacts how corporate entities engaged in Bitcoin mining operate. Companies focused on long-term Bitcoin holding strategies rather than immediate fiat conversion are less swayed by short-term price volatility. They view dips as opportunities to increase their reserves, aligning with their accumulation goals. The operational updates from such companies, like Cango Inc., which we'll discuss next, provide further evidence of this institutional-level commitment and strategic foresight, even amidst broader market fluctuations. Speaking of Cango Inc., their latest August 2025 Bitcoin production and mining operations update reveals some impressive figures. Are they expanding their operations and holdings? Let's find out. Cango Inc.'s August mining surge. Cango Inc., a player in the Bitcoin mining sector, has reported a strong performance for August 2025, demonstrating solid operational progress and a continued commitment to its long-term Bitcoin holding strategy. The company announced the production of 663.7 Bitcoins during the month, marking an increase from the 650.5 Bitcoins mined in July. This growth, while modest on a percentage basis, reflects a steady expansion of their mining capabilities and operational efficiency. On a daily basis, Cango's average Bitcoin production reached 21.41 BTC, up from 20.99 BTC in the previous month. This consistent increase in daily output is a positive indicator of their operational momentum. Perhaps more significantly, Cango's total Bitcoin holdings have now surpassed the 5,000 mark, reaching 5,193.4 BTC by the end of August. This accumulation is particularly noteworthy given the company's stated strategy of holding its mined Bitcoin for the long term, positioning it as a Bitcoin accumulation vehicle rather than a mere mining operation that liquidates its output. Operationally, Cango maintained its deployed hash rate at a steady 50 AS, however. The company achieved a significant improvement in its average operating hash rate, which rose by 6.9% month-over-month to 43.74 AS. This increase in operational hash rate, while the deployed capacity remained constant, signifies enhanced efficiency within their mining fleet. This could be attributed to better uptime, optimized energy consumption, or the integration of more efficient mining hardware through ongoing fleet improvements. Further underscoring their growth ambitions, Cango recently acquired a 50 MW Bitcoin mining facility located in Georgia, USA. This strategic acquisition is expected to bolster their capacity and operational footprint. The company's focus remains dual. On one hand, maximizing the efficiency of its existing fleet through diligent maintenance and selective equipment upgrades, and on the other hand, expanding its operational base through strategic acquisitions. Cango's CEO, Paul Yu, highlighted these achievements, emphasizing that the increased operating hash rate validates their strategy and strengthens their foundation for sustainable growth. He also pointed to targeted initiatives aimed at boosting fleet efficiency, including maintenance of existing hardware and upgrading older miners to newer models. The company sees potential in optimizing operations further and exploring opportunities in related sectors like energy and high-performance computing, HPC. This steady accumulation and operational improvement by Cango Inc. reflect a broader trend among certain corporate entities to view Bitcoin mining not just as a revenue-generating activity, but as a means to build substantial long-term holdings, aligning with the institutional demand we discussed earlier. While Cango is steadily growing its Bitcoin reserves, another Japanese firm is making a massive play for Bitcoin acquisition. Shareholders of Metaplanet have just approved a groundbreaking funding initiative. What exactly are they planning? Metaplanet's multi-billion-dollar Bitcoin push. In a significant move signaling a deepening commitment to Bitcoin, Metaplanet, a Japanese financial entity, has received shareholder approval for a massive funding initiative aimed at acquiring substantial amounts of the flagship cryptocurrency. The company plans to raise an impressive Yen 555 billion, equivalent to approximately $3.8 billion USD, through the issuance of preferred shares. This strategic move underscores Metaplanet's aggressive strategy to bolster its Bitcoin holdings and establish a dominant position in the market, especially within Asia. Metaplanet's pivot towards Bitcoin began amidst Japan's economic challenges, and it has since intensified its focus on the digital asset. The newly approved 555 billion fund is intended to expand its financing options, particularly following a recent slump in its stock price, which saw a 5.4% drop to test support levels. This financial maneuver comes shortly after Metaplanet bolstered its Bitcoin reserves by acquiring 1,009 BTC, bringing its total holdings to 20,000 BTC. This current holding represents a significant portion, approximately 66%, of its year-end target of 30,000 BTC. Looking further ahead, the company has ambitious plans, aiming to accumulate 100,000 BTC by the end of 2026 and a staggering 210,000 BTC by the close of 2027. Metaplanet's president, Simon Jurovich, presented the proposal for the capital raised to shareholders in Tokyo, who subsequently voted in favor of authorizing 555 million preferred shares for potential issuance. This approval allows Metaplanet to create new classes of shares, including Class A and Class B, and potentially hold virtual-only shareholder meetings, enhancing its corporate flexibility. Preferred shares, as a financial instrument, combine features of both equity and debt, offering a unique way to raise capital. Previously, Metaplanet had successfully raised Yen 130,881 million through overseas stock sales, which led to a surge in its stock price. Over the past 8 months, the company has raised over 242 billion for Bitcoin purchases, primarily through a warrant agreement with Evo Fund. However, with Evo's warrants currently paused between September 3rd and September 30th, Metaplanet is actively exploring new fundraising avenues like this preferred share issuance. Metaplanet's substantial Bitcoin acquisitions have positioned it as the largest corporate BTC holder in Asia. Yet, its holdings are still dwarfed by those of MicroStrategy, led by Michael Saylor. MicroStrategy continues its aggressive Bitcoin acquisition strategy, recently adding 3,081 BTC at an average price of $115,829 per coin. This latest purchase brings MicroStrategy's total holdings to 632,457 BTC, currently valued at approximately $68.7 billion, with Bitcoin trading around $110,256.52. Metaplanet's bold move to raise billions for Bitcoin acquisition highlights a significant trend of institutional adoption and strategic asset allocation towards digital currencies, driven by a belief in Bitcoin's long-term value and potential as a store of value, especially in environments of economic uncertainty. So, we've seen Bitcoin, Ethereum, and XRP facing headwinds, institutions making strategic moves, miners like Cango expanding, and Metaplanet making a massive acquisition. It's been a whirlwind of activity. And that's a wrap on today's Market Pulse. We saw Bitcoin, Ethereum, and XRP facing headwinds, but institutions are buying the dip. Cango Inc. is mining more Bitcoin and growing its reserves, while Metaplanet is making a massive multi-billion-dollar play to acquire more BTC. Don't forget to smash that like button, subscribe to Bitcoin Bulletin for all your crypto news, ring that notification bell so you don't miss our next update, leave a comment below with your thoughts, and follow us on all our social media channels for real-time updates.